So there are two rules, okay, which we surround these IB and IS signals with. And the first rule is the high of the IS bar and the low of the IB bar become immediate stop losses with a small filter. The second rule is all these signals are valid, okay, for 10 bars. So if they came in about 30 minutes, they are valid, okay, for the next 300 minutes. So we always define our signaling in terms of time. One signal, okay, which is come in on a 30-minute time frame or even on a 5-minute time frame is not valid forever, right? So a lot of traders, okay, what they do is once okay, they get a signal on whichever chart, on whichever indicator, okay, they are looking at, they expect, okay, that signal, okay, to last them for a lifetime. That's not how the derivative market works. The derivative market is very, very time defined. Time is a very, very critical element of the way we work in our markets. So every single signal, every single message, okay, which comes to you has a defined time to it, an expiry date. And for us, that expiry date is 10 bars. So after that expiry date, that signal is no longer valid. Today, okay, we're just going to train our focus, okay, on understanding one element of that chart, which is the IB and IS signals. And the easier way to do it for a number of traders is to focus, okay, on that. Just let me explain to you that whenever these bars show up, they tell you, okay, that there is a change happening in the market. Some people, okay, who have come in and pushed in aggressive market orders, like all these greens over here, large sizes. And this bar has to be treated very, very differently, okay, from the other bars in the market. So I'm just focused, okay, on the role of these IB bars. If I'm just focused, okay, on these bars, okay, where these IB bars have come, I'm opening myself up to a lot more possible, probable, good trading opportunities in the market.
Good evening, guys. Good evening, everyone. A quick sound check. Am I audible? Great. So let's start with the first part of today's session, which is talking about the structure. And we do this session always, and we keep reviewing what the structure of the market is looking like via market profile. And how we do it is we have the top to bottom approach where we have the monthly, then weekly, and then daily. So whenever a month gets over, we make a monthly report and we see what the structure of that particular month is. And as per that, we look forward for the coming month. So once the December month was over, we got to know that it was a neutral extreme profile to the downside. And we had a monthly FA at top, which completed the 180 at target. So as long as we were below this FA, it was in play, we were bearish, and then we hit the first objective, and then we had formed overlapping to higher value. So the rollover point for this January series was at 23915. So what we saw in January was a move higher in the first few days, and then once this rollover point was taken out, we were always moving lower, and we left some important references at this VWAP of 24193 from the December series, and we had these lower important references which are all broken. The weekly VPOC of 23399, we had spoken about couple of weeks together on that, and then finally that June VWAP 23247, which held in November, was broken. So once that was broken, we were looking for this level to come in this month, 22577, and we are, I think, just 200 points away from it. Tomorrow, if we are opening lower, it will be a probe down to this 23577 and 22544. So let's see how this goes. This is the monthly structure which we had prepared at the end of December, and you can see how these references are playing out so well. That is because the structure of the market is showing us that path. So now let's move on to the weekly report. This is the week which went by last Friday, and this report was published yesterday. So what we did last week in Nifty Spot was formed a neutral center profile. So if you see on a daily basis, we made an attempt to move higher. This was uh, not a typical double distribution, but a kind of a double distribution trend day, which we formed on Monday, after which we made a lookup above previous week's high. So we always maintain in market profile, we look at acceptance or rejection. And if we are getting rejection, we know that the auction wants to probe in the other direction. So when we made an attempt to probe above previous week's high, it left a initiative selling tail and it got rejected. We got a trend day down on Tuesday. So it was very clear that this has got rejected. So it will go on to test the below the lows of the previous week's composite. So that is what it did. But what happened was, just like how we did not get accepted above previous week's high, even the probe below previous week's low did not get much of acceptance. Although we formed a Gaussian curve on Wednesday, we were not able to break the lows which we had made on Tuesday. So that is the reason we went back into this balance, and this prominent POC of 23220 acted like a magnet all of last week. So from the last 2 weeks, whenever we were making an attempt to move away, that magnet of 23220 was attracting it back. So which is why the profile which we made on Friday, the neutral extreme profile to the downside, was a very important cue, because although on the weekly time frame we formed an outside bar with value also outside, value was overlapping on both ends. This overlapping POC of 23220, the auction had moved much away from that level. Last week close was around that POC. We closed at, I think, 23203 last week, but this week was way above and it was more near to the value area low of the weekly profile. So there was a chance that we will get a good move away. We were expecting an imbalance last week itself, but that imbalance did not come and we continued to see neutral moves in the auction. So what we had the profile as the closing report on the weekly was, it is a neutral center which is also an outside bar both in terms of range and value. The value was given, and it, because it was a balance, we were looking at a initiative move below value for downside, and buying side extension handle above value for upside. So we had a confirmation of a weekly FA of 23426 and we had closed below this 23170. So the PLR would be to the downside provided Nifty sustains below this 23054, which is the weekly value area low, with the first objective being the repair of poor lows of last week, which is done, and the lower weekly VPOC of 22745. So this is also the 180 target from last week's high. So that is what we are looking at. And if we open up today's chart and see what the profile has done, we open lower. So a gap down is also an initiative selling tail. So that is the reason these similar highs of today will not have any importance, because we have gap lower from 23091. 23091 was the close on Friday. So we have gap below that, and in fact the low was 23050. So even if you take 23050 as the previous day range, we still have a selling tail from 230052 to 23050. So we have opened lower, we are below previous week's value, and we saw a big seaside extension coming in, because of which we got a bounce, and this bounce has stalled at this 2322936. So we have not been able to get back into this scene of crime. You can see how at the open we left this AP rate buying tail, and this AP rate halfback of 22959 was our reference. That is what we do. In spot, we don't have VWAP, we don't have volume, so we do not have the VWAP and the POC. So what we do is we make a note of these halfbacks of important TPOs. So because the A period had left a buying tail, this was an important TPO, and once we broke this in C, the bullishness was done. And because we were not able to get back into previous range, we knew that auction would probe lower. This was a rejection. So we went on to make new lows in the C, took a breather. Again, this pullback was not able to take off this scene of crime. So that is how the market profile will show you structure wise what is happening, what the auction is doing. And we look at that. We have that continue to have that bias till the time the market profile does not show us any kind of a reversal. So when this happened, we went on to make new lows in into the close, and we have made a low of 2278986. So what we are doing here is we are almost going back to the profile of June 5th and 6th, which was after that election day result where we made that huge range. So this POC is also right from that day. So if we go back to the I'll just open the spot chart and take you back to the June 6th profile. We have this wonderful feature where we can go back to whichever date we want. Because we are looking at the spot, we will go with the spot TPO chart, and let's go back to the June, the week of June where the election results were due. So it was from June 3rd to 7th. So you can see what we did on 3rd. On 4th was a big profile to the downside where we made that big low. And here what we have done today is this 7th of June had this big initiative buying tail. And you can see the lows of this is where we have tested today, what we have tested today. So 22786 is the low which we made in that LTPO. So we have tested this initiative buying tail which started from after this election day low was done. So this will be an important reference going forward, and this is that VPOC which we are talking about. Even on the weekly time frame, we have that VPOC of 22745. This was a nice balance on 6th we had made. So once we break this in this value area low, we are looking for a move back into this June 5th profile. And what will be the references in the June 5th profile? It will be this closing TPO of 22597, and then we have this 22551. So we have also seen that reference of 22577 on the monthly time frame. So that is based on the monthly chart. So you can get these targets being tagged. If we continue to remain weak, then we are looking for a test of these buy side levels from the 5th of June. So if we are probing lower in the rest of the week, this profile will be our uh, focus. We will look at how how the auction reacts at the references of this 5th of June profile. We have this halfback of K which was not tagged, which is a 22516. Then we have this important VPOC of 22335, and then we can continue to probe lower. The halfback of that day was one important reference. You have this GTPO halfback, and then this extension handle which was showing us that the buyers have initiated. So 22098, and on the yearly time frame 2024 has one HVN at 22054, which will be the lowermost objective in case we continue this down move for the rest of the week before the budget session starts. Because on the monthly time frame we were forming a normal variation profile on the Nifty spot, which can now get turned into a trend down one. So the targets for the monthly profile on the downside 22898 is already been tagged, and 22234 would be the final objective. So that is on till the Friday of this month. So Saturday we will have a special session, but the calendar month will get over on Friday. So we will have to see how the Saturday session shapes up. But structure wise, the downside levels as mentioned. So we will see what it does in the June 5th profile, and then we will get on to that all important 4th of June where we made that big swing low. And in fact, when this was live in the afternoon, Shai had mentioned that it could be that we have made a medium swing term low. So in fact, that low was held for almost 7 months. So let's see how it shapes up if we go on to test this zone. So this is as far as this structure wise is concerned in spot. So let's have a quick look at the future chart of Nifty and see what we did last week. The Friday, this was the neutral extreme profile, and you can see how we have been forming a balance. We made an attempt to move away on 21st with a trend day down, but we saw the POC shift lower, and then we did not see much of follow up. On 22nd, we did get some we did see some attempt by the sellers to go down, but the volumes of that day were pretty low. And even though I'll come to the order flow chart in a bit, and we will see the order flow chart from last week till today of how the Nifty futures gave some fantastic indications of where to trade, when to trade, what will be your entry, and what will be your stop loss. So what happened is the sellers failed on this day, resulting in a neutral extreme day to the upside. And then we had this move higher. And on Friday, when we tag this anomaly from the 21st of January, you can see how this ABF 237,375 is also matching with this composite value area high. So we were not able to sustain above this. As soon as we tag this, what happened in the futures, what it was flooded with supply once we got back into this initial balance, and we will see that in the order flow, and how into the close the supply was persistent, and in fact it kept increasing. So structure wise it was a neutral extreme to the downside, and order flow wise we had everything in the favor of shorts. So if we'll just see the order flow in a bit, and so it was not a surprise that we opened with this gap down. And what we did after the gap down was the attempt to probe back into previous week's range. 23020 was last week's low. We made a high of I think 23030 today, 29. High of 23029 today. So you can see how we have left that initiative selling tail right at that attempt to get into previous week's range. So that was telling us that the upside, that there is no way the reversal is coming in after the gap down. And we even in the order flow also we did not see any demand. We were still seeing reds adding even though after the gap down was there. So what we did was we made that seaside and we continued to probe lower. So let's see in the order flow how this shaped up in Nifty, and what were the trades which we could have taken. So this is the order flow of last week. We were probing lower. 21st, as I mentioned, was 21st of January was a trend day down. So we did see some good selling. We did get this swipe in the F, which got stalled right at this POC of the A period. So once this happened, we got this big IS 30 in the K. And this IS30 did not get triggered on that day because we made marginal new lows. So whenever we are getting an IS signal on any time frame, the rules of the IS bar is we'll go short below the IS lows, and the stop loss would be the highs of that IS30 bar. So it is the same with any time frame. So we had to wait for a break of this 23058, and our stop loss would have been 23255. Yes, the range was huge, but then your target also, your expectation also would be on that scale because the volumes here was huge. We had 47,000 contracts in this 30-minute bar, and once this was done we got a small bounce on the next day, 22nd, and we got this IS plus IS on 30 minutes. So what this was showing us that one thing is it's all near the POC of previous day, and what it was showing us, these IS bars were on pretty low volumes. 13,000 and 11,000 contracts on 30 minutes are actually very low volumes. If you see this bar where we had 47,000 contracts, these bars are actually below average when you consider 30 minutes. So when you're watching order flow, volumes is one important aspect which you would want, especially in the bars where you're getting the initiative signals. IBs and IS bar generally will have more than average volumes. Why? Because the market is getting fast and there are more market orders which are getting executed. So naturally the volumes will be on the upper side. So when you are getting IS bars on low volumes, it is only telling you that the volumes are low, the participation is low on that day, and that is the reason the market is even the low volumes is finding it easy to uh, get the IS signals. And what happened after this IS plus ISS, we saw the COT turning green. We saw some big RBs, and we did not get a good enough follow through. And once you see in order flow and in market profile that how do you evaluate if the seller or the buyer whom you have recognized is doing a good job or not. If it's a seller, this IS plus IS, the fact that it was not able to keep the auction below VWAP was a sign that they are not doing a good job. These sellers are not doing a good job. And that is the reason once we got back above VWAP, we got the short covering move, which continued on to the next day. Here again, we saw some good sellers adding in the zone higher, but still what they were not able to do is they were not able to break the VWAP of that day. This is the 23rd of January. So if you are getting sellers, the cot is also turning red slightly, but we were not getting an IS signal, plus we were not able to break VWAP. And you can see how at VWAP we are getting this big 2293 green. We're getting greens whenever we are getting the dip. So what this is telling us, this is the dual market mode. Market is in dual mode and you're getting both buyers and sellers fighting it out. So these kind of order flow, this kind of market asks you to keep patience, because once that fight gets done and one party gets the victory, it will be a good move away from that zone. So that is the reason the last 2 weeks have been a bit hard to trade, because we have got neutral days lot more than any of the months in the previous year. So that is the reason we were getting quite fast two-way moves, and we are getting signals which are not getting a follow-up. So here on the 23rd, what we saw was a P-shaped profile which held VWAP, and then on 24th, what we saw this open rejection reverse to the downside, where we saw huge supply coming in at the open. So this is where we need to be aware in order flow about how to identify where the supply is adding and when the supply is booking profits. So because there is no way that the supply adding has added at one place and will continue to remain for the rest of the month, because these are fast moving markets. And in fact, from the time the bank nifty weeklies are over and the SEBI regulations have come in, we are getting some very good clean signals on both sides. So what the big players have done, what we are it's looking like is they have changed their focus to nifty futures, and they are trading nifty futures in big quantity, and they're trading small moves. They're not waiting for that 600 700 points. They enter, they take 200 points big quantity, and then they come out. So that is what is giving us fast moves both directions. But and that is why it becomes all the more important for us to be in sync with the order flow signals. So here in the 915 bar on Friday, you can see how we had some huge reds coming in. This was an open rejection reverse to the downside, and we had a good red caught supporting that. So no wonder we made new lows. We went on to tag this 23114 with the C side. C side is very famous or infamous, you can say, for giving us a dhoka. So what we did in the seaside is definitely we would have booked out shorts if you get this kind of a range extension in C, and we'll wait for the D to make a lower lows. But what we saw in C was some green coming in. So what it was telling us, some of the shorts which had entered, initiative shorts, were booking profits. And this seaside not only gave us VWAP but went on above it. So on any day when a strong open gets negated, you can get more short covering in place, and you can see new highs for the day. So that is what happened. We went on to make new highs. We made range extensions for in the D, E, and F. But in all the three range extensions, just look at what the cot is showing you: minus 4,600, minus 5,900, minus 2,300. So all, all all this up move was being sold, used by the sellers to get into big positions. So once they held on to this, and 23375, we already saw how it was the value area high of that 6J composite, and also the anomaly from the 21st of January profile. So once this was done, you got this RS plus IS on 30 minutes. So when does the IS gets triggered? Once this low breaks. And plus this was also once you got back into the IB, the auction, that structure is telling you that the character is changed. It is no longer a auction which is going higher. Now it is, the bias has changed to the downside. And when you get a 30-minute IS breaking VWAP, what do you need to do? You need to go short below this with the stop loss at the highs of the IS bar. So you can see how the reds continue to pile up. You can see the bar after the IS, you can see only reds. There is no green colored number on the right, but you can see almost 1, 2, 3, 4, 5, 6, 7, 8, 9 reds. So the selling imbalance continued. The sellers were piling on, and then although the it remained in a range for the next two TPOs, the important thing that the seller was in control was it remained below VWAP. So that is a very classic way to know when you need to add patience and when you need to hold on to shorts, because at no point in time we could get back above the VWAP and this IS30 bar of 23267, which was also the weekly VPOC. So it was only building up, it was only piling on to break this RB bar, but the PLR after this IS30 was always to the downside. And what we did into the close on Friday, we got another IS30. And this IS30 showed us a huge 6,000 seller. Generally, what happens on this kind of a day when the POC is shifting lower, it is more because of the sellers booking profits. But here we did not see sellers booking profit because the COT continued to remain deep red. And we got this huge 6,000, almost a 6,000 lot seller. We had zeros in the order flow, and although this IS30 was not triggered, we already has a IS30 which was in play. And what if you were short, what you could have done is trail your stop loss to the high of this fresh 30 IS bar. And what we did give a small bounce, but then we were not able to get back into this initial balance. So we had some queries on X asking that how there was a big seller but the market did not fall. So it is very important to for us to understand that the players in order flow which you see are of all time frames, starting from intraday, scalping, swing, and series wise. So the player who has come in definitely has come in with a plan. And when you're entering a 6,000 lot sell side order, your stop loss will definitely be somewhere away, and you are looking for a good objective also. So you should not be hampered by a small bounce of 30-40 points, especially when you have everything else in your favor, because the cot at the close on Friday was minus 31,000. The 10 bar cot which we follow was minus 31,000. We had IS plus IS on 30 minutes, which is a very rare phenomenon, and then we had a neutral extreme profile to the downside. On the weekly time frame, we were closing near the weekly value area low, so everything was in sync for a continuation of the imbalance to the downside. So that is the reason it was not at all a surprise that we opened lower. And even if we see today's order flow at the open, you can see how the gap down did not get any green caught. The supply continued to come in, although there was profit booking by the earlier sellers. The sellers continued to come in. The caught you can see of the first half of the day is only red. It is only from the G period, only in the G period where you have one singular green cot. So this was telling us that the PLR, the bias, is still to the downside. And what we did was, after this initial bounce in the A period, once B broke this 22967, this became our reference. And you can see how this pullback high in the F uh, stalled right at that 22967. And because the cot continued to remain red, we went on to make new lows into the close. And again, as we saw on Friday, the cot is still the red. The POC shifting lower is not shown us much of profit booking by these sellers in the when because the cot is still green. So we can expect this downside to continue, and we have already discussed the levels which we are looking at for the um, rest of the week in spot. So that is how you make use of these order flow and make use of the cues you have in order flow. Everything gets into play. We have spoken how order flow is not one single indicator, but it's a combination of 5 or 6 features. In the 5 or 6 features, if there even if there are three of them are in place, you know that it is a good probable setup to enter into the trade. So we have the conditions mentioned for the initiative signals when they happen. So it is important when you're looking at the order flow chart, you are aware about the conditions for the IS bar or the IB bar. So even if for some reason they are not printed, you know that the candle or the bar which is completed has fulfilled all the conditions. So that can be labeled as an IS bar or an IB bar. So that is what we had for the Nifty futures. The order flow and the market structure is still looking for more downside. There is no confirmation of any reversal of or demand coming back. So we will need to see. Even the monthly time frame is that of a trend one to the downside. So we will need to see how much more it can fall. So if you quick look at the Bank Nifty order flow, similar thing. On Friday, what we did in Bank Nifty was the initial balance. We did not make new lows. We made almost similar lows in the C. We got back above VWAP. We probed higher and extended. We made an attempt to extend higher, but you can see how we made similar highs in the uh, E, F, and G period. So when you're making similar highs, it is telling you that the demand is not adding up to extend more. And you can see how you're getting a big red seller here, 2234 seller, and he was able to hold on because there were not much demand which came in above that. So once you have this RS and then you get this IS, you know that the Bank Nifty can give you good downside. Again, as we discussed, the trigger would be a break of this 48650, which was also the POC, I think, of previous session. So, and your stop loss would be this 48900. So once we broke this with that as our reference, we hold on to shorts and we look for that 1:1 objective to be fulfilled. And as we get fresh signals, we can continue to hold on to the latest trailing stop loss levels. So once we get this 30-minute IS and we have done appreciative down move, hitting the first target, then we can trail our stop loss to the cost or to this POC, which has not been tagged. And then today at the open, you can see how the lower open, just like in Nifty, did not show us any green caught, although we had some greens at the lows and we got this bounce. You can see how the entry into previous day's range 48252 was Friday's low, and how that entry is showing you zeros on the buy side and big reds clambered up. So when you're getting an RS at an entry into previous range, this is showing you rejection. This is rejection. So this is the reason we went on to make new lows. But what again we got here was the seaside extension. And seaside, you know what it does. The seaside showed us zeros on the sell side, and as typically it gave a retracement to VWAP. And once it got back above VWAP, it remained above VWAP. So we got this couple of range extensions higher and we stalled. I think to 48365 was the POC from Friday. So this up move stalled right there. Previously in the B period, we saw selling trying to come in over here. They went on to make new lows, and then again in this up move, you saw selling coming just below the POC of previous day. So this is good sell side which has come in here, and that is the reason after consolidation near VWAP for the most part of the day, we saw a test of this lower VPOC of 48,000 into the L period. So Bank Nifty is a neutral day, neutral center day. So, but still the cot is not showing us any greens. So it definitely continues to remain weak and we are looking for more downside, and we will continue to see what the order flow shows us tomorrow at the open and look to take those trades. So as of now, this RSPOC would be one important reference, 48312, and then we will look for some sell side volumes or IS signals on the 3 minute at this 48,000 level. which was the support for the day after the seaside made this low. So 48,000, you get some IS signals in the 3 minutes. You can look to take a short trade tomorrow, and this VWAP or this POC of 48142 would become the immediate reference on the upside. So that is how the Bank Nifty order flow is placed, and that is what we had for today's session. We had the Republic Day offer going on for charts as well as VMR. So you, if in case any of you wants to make use of that offer, which is valid, I think only till tomorrow, you can DM me on X, and I will share the code with you, and we can you can make most of that offer, because that is only a day, that there's only a day more remaining for that offer to expire. So in case that is it for today from my side, guys. In case you have any queries, please feel to post them here in the chat. I would be happy to answer them. And in case there's anything you want to write to us about, you can send us an email on chat support@vtrender.com, or you can even ping me on X. My ID is @uttam goel, and it is open for DMs. This offer is on for both the charts as well as the VMR, so you can sync up for any of these you need. So thank you guys for joining in, and signing off for today, and let's hope to have a great settlement week before the important budget session comes up on Saturday.